Okay, we have 5 different parts here for 22-1. We're going to start with our adjusting entries, so they give us a lot of the information we need right here with our end of year account information as well as our unadjusted trial balance. And so we are going to be journalizing these. Our date will be December 31st for all of them. So we will start out with our uncollectible accounts. So uncollectible accounts expense. We leave the document number blank. And so to do our calculation, okay, so we see up here that our estimated uncollectible amount is the $3,000, so we will take that amount and then we are going to subtract our allowance for uncollectible accounts. So subtract 2232. So our adjustment will be $3,675, and our second line is allowance for uncollectible accounts. Same thing, $3,675 in the credit. Then our next one is going to be for our merchandise inventory. Date is December 31st again. Income summary will be our first account. And to do that calculation, we're going to look here and see what's in our merchandise inventory. So $32,158.15. And then we're going to subtract our amount. So the 4558.15 minus 32,158.15. So we get 12,900. And then our second account is merchandise inventory credit, 12,900. So next we're looking at our supplies and insurance. So our date is December 31st. First we will have supplies expense. Let's see, I'm trying to see if we have just supplies. Okay. So just supplies expense. And so to calculate our amount, we will take our beginning amount here, so $1,276.04, and subtract out our end of the year, so 126. So $1,150.04 is our debit, and then just supplies credit, $1,150.04. Now for our insurance, so December 31st, insurance expense. And prepaid insurance is $4,535.80. And then we will subtract 1,535.80. So 3,000 for debit. And then prepaid insurance, 3,000. Okay, next is looking at our federal income tax. So December 31st, federal income tax expense. And so to calculate this one, we have to take our net income and then subtract, or take our net income and then use the tax table on page 680 and then subtract out the amount that they give us. And I'm sure I'm just not seeing our net income, so we will just check this answer here when we finish this page. So that's our first account, and then our second one is federal income tax payable. Okay, then our next let's see. Okay, just check and see. I think that should be all of our adjustments. So we'll go ahead and grade this. Okay, so as you can see here, I missed a few of our adjustments. So I'm going to encourage you to just pause the video here and go and fix these. Like I skipped interest receivable, which if we look up here, interest income was that, so kind of same thing. Finding it on here, doing your subtracting and so on. So those are all pretty simple ones, and it looks like I guess we're not doing that federal income tax one right now. So that one you don't need, and just add these others in. So then we'll go on to the next step, which is our T accounts. And so we're using the information up here to adjust the T accounts for each journal entry. And so if we start with uncollectible accounts expense, we're going to put $36,750 into the debit. So December, labeling it adjustment, and 36,750. Oh, 3675. Okay. Okay, then we're going to go and look at the other one, allowance for uncollectible accounts. That's going to be a credit. So ADJ again. And then we have interest receivable is a debit. Okay, and I am going to just go ahead and grade this just to save time. I mean, this part is pretty simple, just moving these and putting them on the right side. You would label everything as adjustments. So I'm going to go ahead and click to grade it. Oh, I should have known better that it would not put all the answers in for us. Sorry. Okay. So, I apologize because then it won't let me go back and input things either. So anywhere you see a red X, you should know that it's up here. You need to bring it down to the right side. But like I said, this part is pretty simple, so I guess I felt like I did not need to go through this with you. So just bring your numbers down. And then like on this one, we're just getting our new balance. So here I would type balance, and you can see it has that there when I click on it. And then since these are both on the same side, we have nothing over here to subtract. My new balance is $3,697.32. Interest receivable is correct because nothing else happened. And then like merchandise inventory. So here we have an adjustment, and then it was $12,900. And then we're going to get our new balance, add those together, get $45,058.15. For supplies, we have adjustment and $1,150.04. And then we're coming back on the debit side to get our new balance. So BAL. And 126. So remember, we're taking this current balance and subtracting that out to get 126. Prepaid insurance is going to be the same way. So adjustment 3,000, then our new balance 1,535.80. Accumulated depreciation adjustment, the amount of 2,250. New balance, adding those together, $8,796.20. Come down to interest payable, adjustment, and $277.58. Unearned rent income, we have our adjustment on the debit, $1,000. Come back and get our new balance. So we would subtract those. Our new balance is $3,000. Income summary, we have one adjustment of $12,900. Depreciation expense dash equipment adjustment, $2,250. Insurance expense adjustment, $3,000. Supplies expense adjustment, $1,150.04. Then we had uncollectible, correct. Interest income adjustment, $137.50. We will add these two numbers together here to get our new balance, which is $584.74. Rent income, we have one adjustment, $1,000. And our last one here, interest expense adjustment, $277.58. Our new balance, $1,370.65. And so now we can move on.